Stock tip. Best stock setups.
Hi my friends, I'm Marcel today and I return again with this week's first episode of the week from Stock Tips Daily Update. Well, the market started today with a lot of momentum, and after a positive development, we've entered the day at an inflection point in all of the main indexes. As you can see here, I've also recently posted this on Facebook and Instagram. As you can see here, we've reached this turning point here in the SPY. We've also reached it in the Nasdaq, here in the Qs, and in the IVM. So in all of the major indexes. And this is the point where we will get to see in which direction the market is going to is heading. Are we going to get a nice rally or at least a bounce, or are we going to continue down? And what does this mean for our chart? Well, if we manage to close tomorrow above 398 in the SPY, or let's see in the S&P 500 above 3,980 in the S&P 500. Let's see the Nasdaq above 293 or 294 in the Nasdaq. Then we might just have a nice bounce or rally, in the best case scenario rally. But if we turn back down and if you lose our momentum, then I think the market is going to continue its downtrend, and it's going to reach this next stop here. This would make for 3,600 or 3,700, and my target would be here, so 3,600, 3,700, and in the worst case scenario we could also reach 3,500 respectively, the next Fibonacci retracement point. After that, I don't think the market is going to continue falling. Looking at a weekly chart, I do think it is still unclear in which direction the market is heading. The volume today was also not that impressive, so I would expect a bit more volume here at the start of a rally, above average at least, definitely more than we've got today. So you also see here, this is the inflection point. We've reached the 9 moving average in the daily chart. We've reached in the 30-minute chart. We've reached this inflection point. I will switch to the SPY. This is where I have this line. We've reached this inflection point in the 30-minute chart. And in the 15-minute chart, we are basically fighting for the 200. So this is an inflection point, and tomorrow we are going to see in which direction the market is heading. Are we going to continue with a nice bounce or rally, or are we going to test the next support level, which would be 3,600, 3,500? Well, enough about that. Let's see how the other indexes developed today. So the DAX also had a positive day, ending the day with 1% in plus, but with a shooting star, so a worse development here from a technical standpoint. Seeing how the S&P 500 developed, I wouldn't be that astounded to see that the DAX is going to open with a nice gap, but that's another story. Euro to US dollar developed nicely and reached its target here, the 50 moving average in a daily chart. We can see this already happened a couple of times ago, again and again. So it happened here, so one test, two tests, and then it reached the 50 moving average. I would also like to draw your attention to this thing here. It reached it. It closed over it, and the next day then it went down again, and it continued. It continues its downtrend here. So what's going to happen tomorrow? Again, this all depends on what's going to happen in the German markets. Are the German markets going to continue the downtrend? Then I think Euro to US dollar is going to show weakness again, and it's going to head down again. So they're all correlated. As you can see, there's a convergence in all of the sectors at the time. Also in this pair here, Euro to US dollar. So everywhere in all of the main indexes, and in the Euro to US dollar pair, a nice convergence, and we shall see what tomorrow is going to bring us. Then oil, nothing new here for the oil sector. and the weekly chart is something more eluding here. So oil, not that much to say about oil. It's still on the same level it was at the beginning of March here. Gold, the same story, not much happening. At least we've managed to open above last week's high, but we are still way down, and silver is looking still worse. So we still have a lot of terrain to recover, to make up for, before we can start speaking of a rally in the precious metals here. Okay, then I've also given you a nice setup this week. This was NOC. Again, it pretty much depends on how the rest of the markets are moving. But on the plus side, NOC has shown a lot of strength here. So since the beginning of this correction in the markets, this was at the end of December, in beginning starting with January, NOC hasn't lost that much. Actually, starting with February, we've had a mega rally here, 35% rally, and since then we've consolidated really constantly here, and we've been given now the setup you've seen now, a triangle, which could mean either a breakout or a breakdown. So for the time being, I think this is a very good setup, because NOC has withstood the tests of the market, so the test of time, and withstood the conjuncture. And if we get breakout above 465.5 or 465 in general, I think this would be a no-brainer. This would be a nice buying opportunity, a nice long opportunity. The potential would be here this much, a lot of potential. If you take a look at this, a huge potential here. I think I have to pull it down. So the potential would be that we reach 600 or so. So a potential of 50%, almost, so 40%. A lot of potential for this setup, and that's why it's also the setup of the week. Now I've also given you some other setups today on Facebook and on Instagram, and this is the Nasdaq here, the SPY, and the IVM. This isn't just a way to tell us in which direction the market is heading. This is also a very, very good setup with a very limited risk. So this would be the risk on the downside, on the upside, on the uptrend. This would be your risk here. So $4 risk for such a huge potential, at least until here. So the potential would be $12 with a risk of 4 at least. So this would actually be the first target here. So the same story you can also see in the IVM. So another one of today's setups in the IVM, the same story here, above this line, a buy, and the first target would be here in the range of 183, and you could keep going, and you could stop for the second target of 194, and the same story in the S&P 500. So this would be the risk here. I think you could carefully take this risk here, 293.5, with an entry at 398. So this would mean a 4.5 risk, and a first target potential of 11. So again, almost 3-to-1 on your money. So why the hell not? And furthermore, if the market is turning and is going down again, so this would be your stop here, and this would be your entry. Your entry would be, so here would be your entry, 393.5, and of course the downside is huge. So we could see ourselves stopping at 350. So what do you want more? So $40 for a risk of 4.5. So 1 to 10. That's huge. Now to the last part of the video. And the setups